What's going on, YouTube? It's Dave's Daily Trades, back with an update for AMC. So how'd we do today? Well, kind of how we expected from yesterday's technical breakdown. We were down 5.31%, and as you guys remembered, we were calling for either a retest of our upward trend line that we have right here, or B, a retest of our lower trading range established after Friday's run. Now, what happened was really great, and we are going to be breaking this down, going over some technical indicators, and as always, breaking down the options flow for you folks. But without further ado, let's roll right into that intro and hop into the technical analysis. And we're back. All right, guys, so we are going to be breaking down the 5-minute chart, the 1-hour chart, and the 1-day chart, pulling it all together and making some predictions as to how we finish off the week and what comes next week. Now, of course, you may be looking at the screen saying, God dang, another red day. But in all honesty, this was exactly, in my opinion at least, what AMC needed to move forward. And as we did discuss in yesterday's video, we did expect some red today, primarily because we're in the lower trading range or the higher trading range of Friday's move. So breaking down today, it all started with the rejection off of the 5-minute candle. As we can see right here, that was literally the opening bell today. We got rejected, and as you can see, we did form this bull flag. This bull flag was first established on the 21st, so of course yesterday, and really kind of respected this line throughout the entire day today. Testing the top, testing the bottom, testing the top again. But end of day, we actually got this breakout on the 5-minute chart here. And what's even better is we came out, and end of day, we started to retest the top of that line, which of course is what we need to confirm that technical breakout. And typically, guys, when you do see breakouts out of bull flags like this, it's not just a straight shot to the moon. It's a breakout, come down, retest, confirm it, and then move on. So, going into tomorrow, if we can hold this and start the creep up higher, that would be absolutely great. Or even if we can't, a quick retest of this 28.15 area before taking off, that would be absolutely ideal. So, before we do get into predictions, we are going to go over volume and some technical indicators as well. So, volume, a little on the low side today. But I do have to say it was better than yesterday, because yesterday, look how low volume was. And it was pretty steady just throughout the entire day yesterday. Sorry. Today, we were a little low on the dip today, which is actually a good thing when you have low volume on declining price. That pretty much is a very bullish thing to see. But volume was pretty solid in the morning. Of course, we want to see this way higher, but towards the end of the day, volume did start to ramp up on this move once we got this double bottom at the 28.15, started moving out towards the breakout of that channel. So that is really fantastic to see. So we'll see what happens tomorrow, but all in all, I'm actually extremely bullish. Now, anyways, we're going to jump over here. I hit the 30-minute, but I want to jump on the 1 hour and show you guys what I've been looking at. So, of course, guys, we do have some support here, just about from $26 to $28. And as we have been talking about, we've been talking about this inverse head and shoulders formation that has been playing out. Now, of course, the first head was established back here on 12.1 to just about 12.6. I know we did have a wick down to the bottom of our range here on the larger scale bull flag, but we don't necessarily have to come down all the way to that range of like 25, 27. We did close on the hourly back above $26 and held this very nicely as support. Even moving up, we can see that we do have some support established on 12.1 at that 28.15 area, and also quite recently and today. So I really like this range as support. It is acting very strong right now, and it started to push higher. Now, looking on technical levels down here, volume is still on the decline, guys. We don't love to see that. So in order really to push that price higher tomorrow, we absolutely need to see volume kick in. And especially speaking here, this is a key level in my opinion. If we can hold this as support, confirm this inverse head and shoulders, well, I think we are absolutely off to the races. And we're going to start heading back into that $34 and $36 range. The coffee is absolutely cranking right now, guys, so apologies if I am talking a bit fast here. Now, looking down at the MACD on this 1 hour time frame, you do start to see these histogram bars starting to decline. That's a very great sign and is signifying a reversal on the 1 hour time frame. RSI, pretty much flat, but we are overall trending a little bit higher from yesterday, or earlier today, rather. So that's always good to see. Currently sitting at 48.84. Once we do get into that 50 range, 50 for me is my key zone for bullish. Anything below 50 is a little bit bearish on that RSI scale. Now, let's hop into the 1 day chart and talk about the larger scale picture of how things are going. So we're actually just going to get rid of everything off of this chart here before we jump into it to make things a lot easier for you folks. And actually, I'm going to pull off the Wyckoff accumulation schematic here, just to show you the larger scale time frame that we have been looking at. And of course, guys, study this because this has been a huge help for my technical analysis. And I think it really makes a lot of sense with AMC and how we trade. But also, you can apply this to just about every single stock. You can apply this to crypto and just about anything in the market that trades. So, as you guys know, we have been looking at the accumulation schematic number 1 for the Wyckoff schematic. And what we got recently, and I do believe we still are in this phase C, and phase C tends to drag a little bit. I know how it goes. But anyways, in phase C, instead of getting the spring, we got this terminal shakeout phase. All right, that's your terminal shakeout there. But over the past couple of days, we've actually been creeping up. And yesterday, we did talk about getting rejected at this moving average here, the 200-day, which is why I was a little bit bearish going into today. But guys, when I say I was a little bit bearish, that was only for today. We're not talking about in general here because I'm the biggest AMC bull that I know of, at least. There's some YouTubers who are pretty big AMC bulls, but I am always bullish on AMC. Today didn't change anything. It was just the micro scale time frame that I was looking at. So we did get rejected. We came back down. But what is this exactly playing out? Well, all it is the test right here. We got this test of this lower range, which is equivalent to your ST in phase B. Going back, our ST in phase B is right here, right at $28.70. And look where we freaking closed. We closed at $28.68. This is a low right here, and it doesn't have to be perfect. A low of $28.91. So that to me was almost a picture-perfect test range right there. Now, I know a lot of you guys say, why are you using technicals for a highly manipulated stock? Well, the fact is, I've been charting AMC for just about the past 11 months. And if I thought it was a waste of time, I wouldn't be doing it. But I have found immense value specifically using the Wyckoff accumulation. And I promise you guys, if you read through the mechanics behind this and who exactly the composite man is, you will start to believe that this stuff actually works. And of course, let's hope this plays out tomorrow so we can prove some of the TA haters out there that they are wrong. Now, anyways, this test phase is really great because what happens after that is you spring back up higher than your previous kind of move after your terminal shakeout phase. So if we go back, after the terminal shakeout, we came to right about here, that $32 range. So this test should be the last area here before launching us a bit higher. And I would possibly like to see us hit that $35, $36 range that we've been talking about. If we look back at the drawings, right in between 35, 36-ish, somewhere in there. So tomorrow could be really great. We'll see what happens, guys, but based on the Wyckoff schematic, things are looking great. And I mean, phase C it is what it is, guys. I know it kind of seems like this is taking forever or it's dragging on, but the composite man is really taking his time. And just to show you guys a little bit more information here, shout out to Colin. This guy was fantastic. He was talking about the OBV. Now, what does the OBV stand for? And I believe we have covered this kind of way back on the channel. It's on balance volume. So how does this indicator work? And actually, before we jump into it, let me actually just pull up and show you folks why this is important. All right, and here we are. So this is your on balance volume here. Currently, we're sitting at this range here of 4.91 billion. And the way it works, just to simplify things, when you have green pressure coming in, it pretty much just subtracts it from the red pressure coming in. You subtract the differences, and that's how you get your OBV. So more declining pressure, OBV is going down. But more buying pressure, OBV is going up. And that's in the simplest terms. You can get much more granular with this, but we're just keeping it simple here, guys. So OBV is currently at a level equivalent to this day right here, 621. And just jumping back into this, we just talked about 621. At 621, we were trading at, what is this? Over 50 freaking dollars. Our high of the day was actually 61. Our low of the day was $55. So on balance volume on the 1-day chart is equivalent to when we were trading at $50 and $60. Now, as of today, we were trading in a range between $30 and $28. So, why are we talking about this? Well, it's because institutions and large investors right now are accumulating shares, and we can see this in the OBV. However, there's a divergence in this. Now, let's read through Colin's post right here on what is the OBV and how it actually works. So, when both price and OBV are making higher peaks and higher troughs, the upward trend is likely to continue. When both price and OBV are making lower peaks and lower troughs, the downward trend is likely to continue. Both of these are not true because there is a divergence in how this is playing out. During a trading range, if the OBV is rising, accumulation may be taking place, a warning of an uptrend breakout. That's really key right there. We have a trading range. We know that we're in this Wyckoff accumulation schematic on this larger scale time frame. And what is happening right now when we have OBV at levels that we saw back when we were in the mid 50s to 60s, and we're currently trading in the $28 to $30 range? Well, exactly what this says. Institutions, investors, market makers, whoever you want to say it is accumulating shares right now and getting ready for an upward breakout. This is absolutely huge, guys, and exactly why I have been talking about what we're seeing here on a technical level for so long, because it absolutely works. Now, what happens next is really the big question. Well, A, we need to see that volume come in. And no, I actually had a comment yesterday where someone was saying, I've been buying all I can. I can't afford any more shares. Well, no, there's other players in this. I know us retail, us apes out there have really done quite a bit of buying right here. But the buying comes in from larger players in the market. We're talking about institutions. We're talking about market makers. We're talking about lots of other people outside of the scope of Ape Nation, as you could say. So we got this retest, and tomorrow, I really want to see us start that push higher, back into, I would say, that $34, $35 range. And if we can close the week in the mid-30 range, I would be absolutely ecstatic. Now, it's not going to be a straight shot up. I highly, highly doubt that. I do believe we are going to get this push up to that mid-range, but then come back down. Because as the schematic says here, we'll jump back to it real quick. We come back down, and then we retest our selling climax. Well, where's our selling climax? Our selling climax is right over here, right at $30 on the dot. So what I'm thinking is going to be playing out within tomorrow and early next week is a push to mid 30s, come back down to 30, and then that's really where things get freaking interesting. Once we're in phase D, guys, holy shit, this is really where I want to start to see volume in that 150,000 to just about, 150 million to 300 million. That is really a must, because if we don't have volume, well, we're not going anywhere. We're going to consolidate. And that's what really phase C is all about, where you have this testing, you test the supply and the demand, and once that certain metric is met, Composite Man is ready for phase D. We're not quite there yet, but we are absolutely making the right moves. Now, enough with the charts. Let's get into the options flow. We're just going to refresh it because I haven't done so in a minute. Now, not a lot, as you can see from the charts. Of course, this yellow line is the cutoff from yesterday to today. And right now I have this filter set, per usual, to options over 100,000 in premium. Now, what was really taking place today? Well, we saw quite a few of these puts coming across, buying $25 puts for the 6/17 expiration. And we actually had a decent amount of premiums being paid for this. We had a 257,000, 147,000, 146, and 135. Now, we did have some more calls being bought for that 2/18 expiration for 2022, of course. And if you guys do remember, that's the expiration that we were talking about yesterday, where we saw all of those $60 calls come in. So nonetheless, that's totally fine. And just about end of day today, coming in later in the day, we saw 2 puts being sold, one for 50 and one for 29. Also pretty decent premiums. We're talking 174, 125,000 respectively. And that's great to see. We love those puts being sold. That's bullish. That means whoever was on the other side of that play, they know that Miss Amy is not going down much further. Now, we'll take a quick look and jump into the breakdown for today. And we're actually going to jump into AMC's history. This is this middle button right here. So we've been tracking this just about daily now. And for the most part, calls have been pretty much on the bullish side. Typically, I like to see this more towards the 70, 75 range on the call side, but still being at 63 shows that the bulls love the freaking call option, guys. Volume, on the other hand, was a little bit more bullish. We saw 76.4%. As for expirations, well, of course, guys, the 1223 did have some volume, but that has kind of dried out. 1231, also a lot of volume that we're seeing take place today. And then, for the most part, guys, not too many deep expirations that were taken today, but that's totally fine to see. Breaking down by strike, you can see the Bears were targeting that $26 range, which makes sense for the day that we had, but Bulls are still over here targeting $29. If we go down the food line here, we can see 33. The Bulls want to push here, and it looks like the battle of $40 is starting to take place here. So very, very interesting stuff. But final notes on the charts today. I know this can be painful, and I know some days it feels like this is never going to happen, but it takes time. It takes patience, because you have to realize that there are other players inside of this play that are not apes. We're talking about institution versus institution here, Composite Man versus nefarious short sellers, I guess you could say here. What's going on takes a lot of time, takes a lot of control, and takes a lot of buying momentum to actually take place. I know retail, it came out that Adam Aaron said we own 90% of the float, but I wish it was just that easy where, oh, we own 90%, this thing's going to run. But no, there's a lot more going on behind the scenes that we have to imagine. Today was not a bad day at all. It was actually a really good thing that we had this test phase. We supported our moving average down here, and I am bullish going into tomorrow. Let's bring that freaking volume, guys. Let's hopefully get back into that mid $30 range to close out the week. And just a side note, so you guys don't have to wake up early on Friday, trading is closed. It's a holiday, so enjoy the freaking day, guys. But I will be posting a quick update after hours for tomorrow before the week closes. Hopefully it's a good day, and hopefully we close in that mid-30 range. But guys, hope you all have a great night. Peace out, and see you all tomorrow.